What's up guys, welcome back to Money Crow, the channel all about making your money grow. You might have heard many people tell you to save and invest your money, but you have no idea how to even get started or what to actually invest in. In the span of this one relatively short YouTube video, my goal is to help you easily understand how to build your first stock market portfolio and why you should consider investing in this specific way. The building blocks of the portfolio I'm about to share are geared perfectly toward a beginner investor because it was created with a growth mindset for someone with a larger risk tolerance while still remaining relatively safe and passive. The majority of the portfolio is allocated towards stocks because this is meant for someone just starting out and they should still have a long time frame before actually reaching retirement. There is an individual stock picking aspect to this particular portfolio because I feel it's very valuable, at least in the beginning of your investing journey, to make educated decisions and learn about the risks and rewards of investing with a more active approach. Before we get started, I just want to give a quick shout out to my amazing Patreon supporters. We have our standalone Crow CEO, Jorge Ledesma, and our 4 Crow investors, Prismatic, Erica, Andrew Paz, and John Harden. Thank you all so much for your continued support. If you guys want to be notified immediately after I make an options trade, consider supporting the channel on Patreon. I'll have all that information listed on there. Link is down below. Another easy way to help out the channel is by clicking my 3 different referral links so we can both get free stocks and free cash. For a limited time, Webull is giving away 3 free stocks, so sign up now so you can take advantage of that. M1 Finance is giving away $10 in cash, and Robinhood is giving away a free stock like Apple or Facebook or many others when you sign up. Links are in the description. Thank you. I think one of the most passive, no-brainer, easy to sleep at night ways to invest is investing in something like VTI, which is a broad market US ETF that invests in over 3,500 US companies. It contains every type of company, and it even has small and mid caps alongside the large cap stocks, so you're getting exposure to practically the entire US market. The nice thing about this is that you're not subject to the rules and regulations of something like the S&P 500, which for example has for some reason not included Tesla as part of the 500 companies, even though Tesla ticks all of the boxes to join the S&P 500. VTI, on the other hand, has Tesla as its 10th largest holding. It doesn't have any bias, it simply invests in everything. This is done based on the company's market cap, so you're kind of overexposed to companies that are huge, but that also means that you have a safer allocation because blue chip stocks, those big companies, are less likely to go bankrupt. Investing like this in a large basket of stocks over the long term has worked out really well for the entirety of the stock market. More specifically, for VTI, over its entire lifetime that the ETF has been around, VTI has had a total return of 312.71% since its inception in May of 2001, which is just phenomenal. If you invested $1,000 when this fund came out, today you would have $13,127. Now let's talk about investing a large percentage of your entire net worth in just one individual stock. If that stock were to drop 50%, that would be terrifying for me and personally keep me up at night because I don't have the risk tolerance for that type of concentrated risk. However, if you invest in something like VTI, which we just covered, and it drops 50%, although that's still very unsettling, you are invested in a fund that tracks all of the major companies in the US, so the odds of that money going to zero or not eventually recovering is so slim that it makes it so much easier to stomach those types of drops when you're diversified so well. If we went back to the riskier scenario of just investing in one or a few individual stocks, you have a much greater chance of that handful of stocks to go bankrupt or to severely lag the market during a recovery. Of course, you also have the possibility to do much better than the overall market with that type of concentration. But I would recommend only reserving a small chunk of your portfolio for individual stocks. All of that being said, I would dedicate 70% of your investable assets to something like VTI, so you can be sure you're well diversified and hopefully treat this large portion of your portfolio as a set it and forget it slice of your overall investment pie. In order to participate directly in choosing your favorite companies that you have high conviction in, I recommend allotting 10% of your portfolio to a small basket of, say, 5 individual stocks with 2% allocated to each of these 5 stocks. This is the fun part where you can invest in any stocks you'd like. I personally have 5 questions that I ask myself in order to choose those 5 stocks. Number 1, which company directly or indirectly benefits the most from your employment? Since I'm making YouTube videos and hope to one day become monetized, I'll go with Google for this one. Number 2, which company do you spend the most money with per year and believe you will continue spending money with for the next 10 years? For me, this is Costco. I shop there once or twice per month and get all of my basic household supplies and the majority of my groceries from there too. I love their products, pricing, and service, so I definitely see myself continuing to support them throughout the years. Number 3, which company makes your favorite products or services? Although I'd recommend choosing 5 different stocks, I have to go with Google for this one again. With YouTube, Google search engine, Gmail, Google Maps, Google Mini, Google Play Store, and much more, the company has become a stock that has integrated itself in my life as a resource of utility and entertainment. I believe they're going to continue to grow each part of their business far into the future and generate very impressive returns. Number 4, which company are you most excited about in terms of futuristic endeavors and dominance in that market? Facebook has absolute screen time dominance when it comes to attracting their users' attention to their services like their Facebook platform, Instagram, and WhatsApp. Their growth and retention rates are incredible. However, in terms of projects they're currently working on that will become massive in the future, I have to go with the fact that I think they'll be the leading player in virtual and augmented reality with their Oculus branch of their business. With their regular ad-based business model for Facebook, they're so profitable that they can spend billions in research and development and really dedicate the proper teams and resources to eventually make Oculus one of the biggest companies in the world. Number 5, if you were a trillionaire investor, which company would you love to completely buy and own today and keep it forever? For me, that's Disney. I think they'll continue to dominate their customers' memories through recognizable media entertainment, being a favorite physical destination to visit, and the largest, I think, is continued nostalgia for generations to come. They are one of the most recognizable brands in the entire world and own so many household names such as Star Wars, the Marvel Cinematic Universe, Pixar, and of course all of their old school classics. In addition, they have so much potential to invest in and exponentially grow their Disney Plus streaming service. So with 70% in VTI and 10% in these 5 stocks, we're now at 80% overall in our portfolio. If you guys enjoy this type of content, I would really appreciate it if you like the video and subscribe to the channel. Thank you guys very much. Moving on, I would dedicate a small slice of 2% to BRK.B, which is Warren Buffett's very own Berkshire Hathaway. You get exposure to the company's private, entirely owned businesses and to exclusive deals. Warren Buffett is and has been an investing legend. If you would have invested $1,000 when he took over the company in 1965, today you would have made over $27 million. That destroys the average returns of the overall market. But rather than put all your eggs in this basket, simply invest a small portion and hope the company is able to continue impressing into the future. They've been somewhat lagging in recent years, which presents a great buying opportunity in my opinion. That brings us to 82% invested in our portfolio. In terms of international stocks, I personally would only invest a small chunk since these days the US has plenty of exposure to international markets. We can see that that number could very well be over 40%. So I would only invest 3% into a broad market international ETF like VXUS. Now we're at 85% invested. If you're treating your entire net worth as your portfolio, I like keeping a decent cash buffer in order to have an emergency fund and also to be able to take advantage of buying opportunities when the market drops. I recommend something like 10% of your net worth to remain in cash. I would simply park that cash in a high yield savings account. I'm currently using Yada Bank, which has given me a 2% annualized return so far, and I plan to hopefully do a review video in the future of how the long-term results look like. We're now done with 95% of our entire portfolio. The final 5% of your portfolio should be dedicated toward real estate holdings, which can either be your primary residence or REITs. If you don't know what a REIT is, it's a real estate investment trust. It's highly likely that if you've owned your primary residence for a while, your allocation to this is much more than 5%, which is fine, but that means you shouldn't invest any additional funds into this asset class so you don't risk becoming overexposed. If you're a real estate investor that rents out properties or fixes and flips, that's a completely different story. That's not my personal forte, and I wouldn't recommend that path for an absolute beginner, but it's definitely something worth exploring. If you have no real estate exposure at all, and you have no equity in a house, I would personally split the 5% allocation in thirds between VNQ, O, and FRT. Those are my three favorite REITs. VNQ is actually a REIT fund, so it contains many different REITs, and it's managed by Vanguard just like VTI and VXUS. But of course, as with all my personal recommendations, that's all they are. They're just my personal preferences, and you should do all your own research and never blindly follow anyone's opinions. So we've covered 100% of your total portfolio. The reason you don't find bonds in this portfolio is because I'm already recommending a cash buffer which can be invested in a high yield savings account, and because this is supposed to be a growth portfolio for a beginner to hold over the long term. Bonds are currently paying very low interest rates, and they suffer from interest rate risk, which basically means when interest rates rise again, bond values will fall. In this market environment, it doesn't make much sense to start your first investment portfolio with a bond allocation. To recap, these are all my recommended asset allocations for a beginner portfolio. And remember, there are millions of strategies out there, and if mine doesn't align with your personal risk tolerance and goals, please do more research before blindly investing. Rather than simply copying my allocations to a T, instead use it as a starting point. Do more research and find out what your investing personality looks like and what you actually want to have invested in your portfolio. Use this as one of your many examples. Also, in my video about how to invest for teenagers and young adults, I go over the 6 things I wish I knew about investing much earlier in my life. I highly recommend watching that video as well. I'll leave a link to it in my end screen in a few seconds. Thank you all so much for watching until the very end. I hope you'll be back for future videos, and as always, please subscribe, hit the notification bell, like, and comment. Have a great day, and I'll see you next time.